Hey guys, welcome back to NFT Zone. I'm sure you've already heard of NFTs, but have you already invested in them? If not, then you'll be shocked by all the great reasons why you have to invest in them, as they'll revolutionize the world of art. Today's video will discuss why you should invest in NFTs. Also, make sure to like the video and subscribe to our channel for more NFT content. Without further ado, let's head into the video. Because of a partnership with anonymous digital artist Pock and Nifty Gateway, Sothebys has become the latest established brand in art to venture into the world of NFTs. This novel collection of digital art redefining our understanding of value was sold at auction for more than $17 million by the auction house Sothebys International Realty. In the case of some pieces, such as the Switch, a monochromatic 3D building that will be altered by the artist at an indeterminate point in the future, the artist got bids in excess of $1 million. Christie's was able to sell digital artist Beeple's Everyday's NFT for an eye-watering $68 million in March because of its one-of-a-kind nature. In addition to trading collectibles such as baseball cards and computer gaming goods such as swords and avatar skins, NFTs are also being able to trade things such as swords and avatar skins. By the way, have you already invested in NFTs? Let us know in the comment section down below. Bubble trouble. Similarly to other recent price increases such as GameStop and Dogecoin, the enthusiasm around NFT supports a narrative that these are speculative bubbles caused by stimulus checks in the United States, lockdown boredom, and low interest rates. Celebrities like as music artist Grimes and YouTuber Logan Paul, who have each released their own flagship NFTs to ride the wave, are examples of this trend. So much so that even the entrepreneur who purchased Beeple's world record-breaking artwork believes that investing in NFTs is a huge risk and that it is even crazier than investing in cryptocurrency. However, history teaches us that we should be cautious about dismissing NFTs as a fleeting trend because the significance of technical advances is typically revealed after the initial frenzy has died down. Many pundits disregarded the inflow of tech firms surrounding the dot-com boom in the late 1990s, as well as the initial wave of widespread cryptocurrency enthusiasm in 2017, only to be shown utterly incorrect when Amazon and Bitcoin reemerged in the aftermath of the financial crisis. NFTs are really down significantly from their all-time highs, with an average price that's fallen more than 70% since February. Perhaps the bursting of a bubble is more accurately described as a weeding out of gimmicky tokens, given that the initial frenzy has subsided a little bit. Fortunately, the hype circle developed by the US consulting firm Gartner, which depicts the normal evolution of a new technology, captures this phenomenon rather well. Because of NFTs, we're most likely moving away from the peak of inflated expectation and toward the same plateau of productivity that Amazon achieved a long time ago. According to Austrian economist Joseph Schumpeter, capitalism functions because of the way it's structured. Capitalism, in the opinion of Schumpeter, is characterized by a constant churning from old to new, as the most recent and most inventive companies replace those that came before them, a process he termed creative destruction. Furthermore, the conflict that exists between innovation and incumbency leads to the skepticism that constantly accompanies new technology of this nature. What happens next? NFTs open the door to the development of new business models that were previously unimaginable. NFTs allow artists to include conditions that ensure they receive a portion of the revenue from each resale of their work. This means they stand to gain if the value of their work rises in value. Of course, football teams have been utilizing similar contractual terms when selling players for quite some time. But NFTs eliminate the need to follow an asset's journey and enforce such entitlements on each and every transaction. New art platforms such as Neo Art are able to establish in a very straightforward manner that they are the legal owners of digital artworks. When consumers borrow or purchase art from the platform, they may display it on a screen with confidence, knowing that there will be no issues with copyright or authenticity since the NFT and blockchain will verify that ownership is authentically transferred. NFTs provide musicians with the opportunity to reward their fans with improved media and additional incentives in exchange for their support. In the case of sports memorabilia, it's estimated that between 50% and 80% of the goods are fake. Putting these goods into NFTs with a clear transaction history that can be traced back to the originator may be the solution to the counterfeiting problem. The digital revolution. However, the potential of NFTs extends well beyond these areas since they fundamentally alter the norms of ownership. The establishment of confidence in a transaction, the exchange of contracts, and the transfer of money have traditionally been dependent on layers of middlemen. All this will no longer be necessary in the future due to the fact that the information on blockchains cannot be altered. Transactions recorded on blockchains are trustworthy. It is possible to utilize smart contracts instead of attorneys and escrow accounts to automatically ensure that money and assets are transferred and that both parties adhere to the terms of their agreements. NFTs turn assets into tokens, which allow them to be transferred across different parts of the system. This has the potential to fundamentally change sectors such as real estate and automobiles, to name a few examples. NFTs may also be a part of the answer when it comes to resolving difficulties relating to land ownership. Currently, just 30% of the world's population has legally registered ownership rights to their land and possessions. Those who do not have well-defined rights find it considerably more difficult to obtain financing and credit. Also, if we spend more time in virtual worlds in the future, the items that we buy there will very certainly be purchased and sold as non-financial tokens as well. The decentralized economy will see a slew of additional breakthroughs that are still in the early stages of conception. In general, we may expect a lot more transparent and direct market than we are accustomed to. Those who believe they're witnessing a flash in the pan are unlikely to be prepared when the time comes for it to happen. So, once we've discussed why you should invest in them, let's talk about how you may go about doing so. Also, make sure to write your thoughts on the future of NFTs in the comment section. How to invest in them. Due to the fact that the majority of NFTs are Ethereum-based tokens, the majority of marketplaces for these collectibles only take ETH tokens as payment. To acquire Ethereum, sign into your existing cryptocurrency exchange account and transfer your cryptocurrency to your MetaMask wallet. If you do not currently have a cryptocurrency exchange account, sign up for one now. When it comes to cryptocurrency exchanges, Coinbase and eToro are ideal alternatives for novices who do not already have an account. Connect your MetaMask or OpenSea or any other NFT marketplace after that. There are a plethora of markets where you may purchase and sell NFTs. There are many various sorts of art and collectibles to select from. Depending on the marketplace you choose, there are secondary marketplaces on a lot of these websites that sell a range of NFTs, but each platform functions in a somewhat different way. Once you've financed your account, purchasing an NFT is a straightforward process. The majority of markets operate on an auction model, which means you'll have to submit a bid for the NFT you wish to buy. Some markets function more like an exchange, utilizing the highest bid and lowest ask for NFTs that have several prints, while others operate more like a traditional auction house. One advantage of acquiring an NFT from the primary market is the possible resale value that may be realized immediately after the product is placed on the market. Following the first introduction of some NFTs, which are in high demand, they'll sell for 5 to 10 times their initial price. The disadvantage of purchasing NFTs on the primary market is that it's difficult to predict the level of demand for the work. On the secondary market, you may compare your buy to other people's purchases in the same category. What do you think about NFTs? Do you plan to invest in them? Let us know in the comments section. This brings us to the end of today's video. I hope you had fun watching it. Give us a like if you did and subscribe to our channel to stay updated. Also, activate the bell to get notified for all of our upcoming videos on the world of NFTs. Enjoy your day, and I'll see you in the next video.